Hi, Tony here from Property Professionals Australia, keeping it real again with the real important facts for you to invest or buy more astutely. Today we're going to talk about the advantages and disadvantages to buying apartments and units. Advantages first, more affordable. They're often more affordable to buy into apartments over, say, traditional houses, dual occupies, even townhouses. Which is easier for people that are especially getting in for the first time. Smaller mortgage, so less cost to hold that from that point of view. So that can be an advantage. Location to services and amenities can be a major advantage. Quite often more centrally located to things like jobs, schools, shops, transport, buses or trains in major cities, etc., where you don't need to get in your car, you might be able to just walk there. So that can be a major advantage. If it's for investment purposes, depreciation, because most of the cost of write-off through depreciation will be building costs, and most of your cost of purchase will be the building costs because there's very little land content. So most of it is depreciable. So that can help you with your cash flow through tax write-offs when investing. Now, disadvantages. There's a lot of disadvantages, and you need to be really aware of these things before you enter into looking at apartments or units for investment as a great investment. First thing I would say to you is look at the demand in the area, because a lot of units, and this is especially for investment purposes, there's an oversupply around Australia, but even for owner occupiers when I say this, what sort of capital growth potential you're going to get when there's an oversupply? There's too many of them on the market, too many of them getting development approval. Is that going to limit your capital growth to perhaps leverage on later on for perhaps another property or for other reasons in life? I would say absolutely it will. You need the demand to be high, driving the growth potential, driving that market forward so you get those strong returns sooner, and cash flow follows that capital growth. So your rent return for an investment of an apartment will also be diminished if there's an oversupply, right? So timing and the cycle and demand is very important. Holding cost. If you purchase an apartment, generally speaking, and this is off the plan, I'm more focused on when I say this, you'll put 10% down at the start, and it may take 2 or 3 years on average to build an apartment complex. So you're not settling on that property for 2 or 3 years. Lending criteria can change in that time frame. Your personal circumstances could change in that time frame. So you may not be able to borrow the same amount in 2 or 3 years you could today. So just bear that in mind when you do put your 10% down and decide to buy. Is that going to be a problem? Can you foresee that as a problem? And is the market going to change? Because remember I talked about capital growth. Is the market perhaps going to come off and correct? If there was an undersupply, will there be an oversupply? Will it correct? I mean, these are the things to take into consideration when investing, but also for owner-occupied. You want that capital growth. So you want to think about the time to complete, whether your circumstances will change, and whether you're going to get that capital growth or that return via rent after 2 or 3 years, as opposed to a house that will take 6 to 8 months to build and have a tenant in it. So you know roughly where it's going to be a lot easier. Mostly investors invest in units and apartments over houses, and they can hamper your cash flow and your capital growth potential as well. If there's too many investors and they don't put money into their properties, as opposed to a house, land estate or suburb where you've got a higher percentage of owner occupiers spending more than you, putting more money into that property, building up the capital growth potential in that property by spending money, upgrading, developing, renovating. Unlikely in apartments because they're mostly investors, so keep that in mind as well. Land appreciates, you've heard that, and houses depreciate. We talked about the advantage of depreciating it for tax reasons for investors, but what about the appreciating value? If there's very little land content, well then there's less appreciating value. So that's why, generally speaking, over the last 50 years, you get better appreciation value, the price going up in house lands over units and apartments. So they're some of the major ones. Be really mindful of the changes in lending over that 2 or 3 years to complete the build as well. Thanks for listening, and next week we're going to talk about some great do's and don'ts to maintenance issues that can creep up and hamper your investment return with older properties as opposed to new properties. Okay? Why don't you do yourself a favour, and if you want to know more and you want to get exact advice for you and the right plan and understanding for what you should invest in, why don't you take advantage of one of our complimentary and free discovery sessions where you'll get all your questions answered, a detailed understanding of the critical stuff you need to understand for investing correctly and for the highest returns to fast track your investment potential, and get a real understanding of where you are now, what you need, what your shortfall is to retire wealthy. All right, guys, thanks for listening. Tony from PPA, keeping it real again.